Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be working with a well-known technical indicator which is also widely used for determining the trade entries. The well-known indicator is named pivot, and by the name you can guess its formation also if you have been trading in the market earlier, and if you haven't been, well, this is the time to learn. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. Here you will find this indicator just below the Murray channel indicator. Last session was dedicated to Murray channels, and we see how we could have utilized that indicator. Now this is the turn of pivot, and we will see what we can figure out what kind of trade setup we can build with this. So this is the indicator, and these are the parameters which we have to define. These 5 input parameters have to be defined, based on which we will be getting this output value. We have this central point of the pivot series along with these resistance and support formation. The three resistance levels R1, R2, and R3 are provided to us, and along with that the three support levels also, and one more thing, separator is also given, but we will be mostly concentrating on three key parameters, three key output values which are going to be important for us in today's session. These are going to be central pivot point, first resistance, and the first support of these pivot point series. So we will see how we can utilize this particular indicator. For that, I will give you a idea of what the logic is going to be. This is the gold chart, which I will change to Euro USD. Euro USD will be the instrument of choice for this session. We want to execute the trade closer to the central pivot point in the initial part of the day, when there has not been much move in the underlying instrument. And we see that this central pivot point generally acts as a determining factor. Not always, but most of the time we see that on the side on which the day starts, usually the day closes on the same side. So the logic is going to be fairly simple. We simply want to utilize the central pivot point as a decisive marker. So if we see that the price action in the initial part of the day is below the central pivot point, we will be looking to initiate the sell trade. And if we see that the price action is happening above this central point, then we will be looking to initiate the buy trade. And to make sure that we get involved in the trade only in the initial moments when the volatility is low and there is a probability of pickup. So for that, we will be utilizing the range, the trading range for the daily candle. We will limit it to below 20 pips, and at the minimum, to make sure that there has been the start and a couple of hours of movement. We will also make a minimum condition that the price difference between the high and the low of the day candle should be more than 10 pips, and it should be less than 20 pips. So that will be the range. And in addition to that, for buy trade to execute, we will need the last hourly candle close to have happened in green. So the closing value needs to be greater than the opening value, and in the penultimate hour, the price action should have been moving lower with the closing value lower than the opening price. And for any sell trade to be initiated, the day condition remains the same, the minimum difference of 10 pips and the maximum difference of 20 pips. In addition to that, we utilize the central pivot point. Here, the price action needs to be bearish. So for that, we need the last hourly candle close to have happened below this central point of the pivot series. And along with that, we also take a look on the price action. So the penultimate candle should have closed with gains. The closing value should have been higher than the opening price, whereas in the last hour, the closing value was below the opening price. And to make the stop loss and target price we will rely on the difference between the central pivot point and the first resistance and the first support. So for any buy trade, the target is going to be simply the difference between the central point on and the first resistance of that day's pivot series. And for any sell trade, the target is going to be the difference between the first support and the central point. And I'm not placing the order exactly at the first support or first resistance simply because we will not be executing the order exactly at the pivot point. So we need some room for profit, and also there is good chance that we will see the price action overshooting these support or the resistance level to some extent, if not the reversal. So that is what the logic is, and I hope you got the fair idea of how this idea is going to be working. So now we head back to the Visual JForex board. The logic is quite simple, and to execute that, we need this indicator to be defined on the daily time frame. So I will have to change it, the candle period, to be daily. Okay. Shift is going to remain 0. This is also going to change today. Historical levels we are not really concerned with, so we leave it false. Okay. Now to get started with the algorithm, first thing we need is the logical component. We will use these if blocks, and here we have to use default instrument and match it with candle instrument. To get the instrument subscription done and to get it right. And here the instrument of choice needs to be selected, which is going to be Euro USD. Here it is. And now we take into consideration the position info, position amount, and it should be equal to 0. Okay. And moving to the price action data, we will have to utilize the info blocks, get historical candle. We will use the daily as well as hourly candles. Here the candle period will be changed to day. Shift value going to remain 0. 2 more of this will be needed of the hourly time frame. shift value of 1 and 2. And to pinpoint the exact entry point, we will also be taking the help of 10-second get historical candle. This I will change to 10 seconds, and this one also. Shift value will need to be changed to 1 and 2 respectively. To define 10 pips and 20 pips requirement to set the condition that the difference between the days candle high and candle low should be within the predefined range, we will need to carry out two calculations also, which we will get it done in this session also before wrapping up the session. So mathematical components need to be added, two of these. And here auto created variable, default instrument pip size will need to be multiplied by new variables with start value of 10 pips condition, and here we will take 20 pips, 20 pip condition, and the result is going to be simply A1 into A2, here also A1 into A2. This we will name in P. This we will name in T. Okay. So these two variables have been created with the desired values. With these, we stop here for the day, and I hope you have been able to understand the logical part as well as these structure which has been created using these indicator blocks, and along with that we are also relying on the get historical candle to look at the price action data. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section. For further coverage of the market developments, you can check out the Dukascopy Analytics page. We are also available on the Facebook. Do reach out to us there. And if you haven't started to trade yet, you can check out the JForex platform, which provides a low-cost trading environment and a fabulous trade system. Thank you all for joining in. Have a fabulous time ahead.